Hi everyone, good to be here. Thanks, darling. And hopefully you can hear me loud and clear and also see my screen. I'm on NinjaTrader and I'm on the triple Qs here just to show you I've got a whole array of timeframes here from the 15-second at the top left right the way down to the bottom right on the weekly. And it's really the weekly chart that I wanted to concentrate on to really pick up on what Anna was saying. As I say, this is the triple Qs. And I'm sure, like everybody else, you're very familiar with the strength in the technology sector, which has very much been driving what we've seen over the last few months, over the last 2-3 years. But as far as I'm concerned, the technology sector per se, the triple Qs, the NQ, what this chart tells me is that we are potentially at a tipping point. So you might say, well, why is it that you see that in the chart? And there's several reasons that I can see it here. But first of all, obviously, right over on the, Anna talked about looking back in history. Over on the left-hand side, we have this peak here. We certainly peaked at a higher level before we had this big sell-off. What we've got here is, first of all, signs of weakness. From a VPA perspective, if you look at these two candles, for example, we had this widespread up candle, but we had it on lower volume. Not an instant reversal signal in its own right, but nevertheless a sign that participation is falling away, enthusiasm is falling away, and volume is falling away. So we've got a widespread candle, but the volume is lower than on the previous. So it's an anomalous candle. We've got a candle that's moved a long way, the price action has moved quite a long way, and yet the volume is falling on the two candles. Prior to that, you've got weakness here, you've got a nice up thrust candle, you've got a 2-bar reversal here, bearish engulfing if you like. We see the reversal, then we see this relatively weak rally, attempting rally. It falls away again, we get more selling coming in. Then we have another attempt to rally. But the important point is that each of these, we get the top here. The rally here didn't even achieve the top of the first effort. And once again, we're seeing that reflected here with yet another rally and a failed attempt to recover the bullish trend. And down we come again. Good strong volume under that widespread down candle, price and volume in agreement. And now what we're seeing here is, you may not be able to see it, but we've got a wick to the upper body here up to 360, and we've come down all the way to 350. So we've got a narrow spread candle, we've got another attempt to rally with a wick to the upper body. And what's also important about this is that we are now breaching just a very simple, crude, put a line through there, and you could say, well, that is a pretty important area of potential support, which has now potentially been breached. We are, where are we? It's Wednesday today. Potentially the market could recover and close above there. But if it stays anything like this shape and maybe even deeper, then as far as we're concerned from a technical perspective, that has certainly breached what could be considered at this level a potential area of support. To add further to the negative outlook, if you like, when we look at the volume point of control, what have we got in the way of potential support coming into play? And we have a huge area of very, very light volume, which goes all the way from where we are, 350, all the way down to 330, before we even start to get into these higher volume areas. And we've got the VPOC here, this yellow dashed line right the way down at 290. If you're not familiar with using volume as from a support and resistance perspective, it works in exactly the same way as we do with price. Because if you have the higher areas of volume on the histogram, then you would expect price to be supported at that point or to be resisted at that point. Equally, where you have low volume regions, this is a low volume node, a very low volume node here, then certainly in a downtrend, even more so than in the uptrend, you can see how fast the price action moves through this region in the uptrend here? Well, if we're in a downtrend, and I'm sure you don't need me to remind you, but markets fall much faster than they ever rise, and there are reasons for that, which we've explained many of these webinars and also in the program. But generally speaking, that is what happens because market makers are in a hurry, and therefore markets will move much more quickly to the downside than they ever do to the upside. And it's something I'm always conscious of because I'm heavily biased to the short side all the time in everything I trade, something I'm aware of, something I have to control. That's my problem. But this is the technical picture, and why it's so important is because it revolves around technology and the technology sector. And if the technology sector, given the size of some of those magnificent seven stocks that Anne's mentioned, then that is going to represent a huge, huge shift in sentiment. So hence the reason I've pulled this chart up. I think it's one of many which are important at the moment, and certainly extremely significant if that closes anywhere 350 or below, and we get a candle with a wick to the upper body. And the reason these candles are so important, particularly once the downtrend, and you can call this a downtrend in preparation if you like, but it certainly looks like the start of a downtrend. The reason these candles are so important is because the analogy I've often used is of filling a balloon with water, which I'm sure you've all done at some point in your life, where you've maybe at school we used to do it on the taps at school. Hugely hilarious when it burst. It fills with water, it gets enormous, it gets very elongated with the weight of the water, and eventually, of course, it bursts. And it's a very similar analogy to these sorts of candles. They are filling up with water. The weight of that water in there is really dragging it lower, extending it all the time. And then, of course, you get the explosion and the cascade, the price cascade, the pricing waterfall then begins. So it's an analogy that I put out for you, and certainly one I think that works very well. And that's what I find particularly worrying about that particular candle. And I have to say, at the moment, from a personal perspective, we are pretty heavily in cash and pretty heavily in lower risk assets right now for various reasons, not least because of the various setups that are now appearing across the key charts. In terms of today, it's been a down day pretty much, and I'm not going to go through all the timeframes here because I just want to move on to some other things. I'm also conscious very much of the time because we've literally only got a few minutes left anyway, but I'll overrun. So that's on the Qs, the triple Qs, the ETFs. Where are we going first? Let's go to VRSI stocks. This is on Tesla. This is on Tesla. I've got 3 time frames, top and bottom, so they mirror one another. And this is what Anna mentioned about how I like to have this indicator, which we've released in the last few weeks, called the volume relative strength indicator. On the top line, you've got the 1 minute, 3 minute, and the 5 minute. And on the bottom, you've got exactly the same time frames. The only difference is that on the top, we've got the VRSI, which is the volume relative strength indicator. And on the bottom, we've just got volume. So the reason I like this is because from an educational perspective, but from a trading perspective as well, you're looking at 2 facets of volume. On the lower level, you're looking at vanilla VPA and the way we read it. And on the top line, we are looking at how the indicator interprets the relationship between the relative volume that is appearing on the time frames. And that is then represented graphically in terms of pressure. So we talk a lot about, I've recorded a whole load of videos. You can find them on the Quantum Trading site. There's a whole load of videos on this indicator itself. It's currently available on TradingView. It will be available with the other variants, the other indicators we've released, the VWAP and also the market strength indicator. They're on TradingView right now. This one will be available on NinjaTrader next week. And if you have the full package of NinjaTrader indicators, you will get these free of charge. It's what we always do for all our customers. So if you invest in a full package on the platform, then you will get the indicators in due course irrespective of when you bought that. Could be years ago, and we have customers going back 10 years and more. The indicator works, I won't go through it in great detail, but it's a graphical indicator. It's clearly you have a datum point here of 0 where sentiment moves from bullish to bearish or bearish to bullish. But the important point about it is not only are they color-coded to show you the strength of sentiment in terms of the volume, the relative volume that's being applied to a trend, they also show you that in terms of the height, and where you see these very tall candles, and then we get this diminishing. Yes, the sentiment has changed. We get a little bit of a crossover here, but you can see from the crossover at that point that the strength of pressure in that move is very low, because when you look at the height of that bar, I was going to call it a candle, I would call it a bar, is very small when considered against the height of pressure over here. And in the same way that we look at the height of volume bars below here and interpret them accordingly, we do exactly the same here. And what's important about this very simple exercise, a very simple setup with just 3 time frames, I often use more, but just for the purposes of looking neat on the screen, I've reduced it down to 3. Multiple time frames are absolutely key, whatever you're doing. Doesn't matter whether it's from a technical perspective, whether it's indicator based, whatever it is, it's using multiple time frames. Sometimes I have 8 on the screen, but the 3 is the absolute bare minimum as far as I'm concerned, and Anna would say the same thing. But the important point is this: when you look across over on the left hand side, you will see little peaks and troughs as we move, and bear in mind this is a 1 minute time frame. Of course you're going to see that all the time as a trend develops. As you move into this one, the bearish sentiment is maintained pretty much, and that applies also over onto the 5 minute. And the key point is this: the indicator, in much the same way as several others, one that comes to mind immediately is the trend monitor. What we attempt to do with these indicators, in conjunction with the information they convey, is to help you stay in a position and maximize that profitability. Because the hardest thing to do in trading, bar none, is when you have some profit in a move and then you start to see your P&L reverse and move against you, and your emotional response is to close the position entirely. If you've been doing this for a few years, then you may well leave some positions on the table and just let them run and take a partial close. But generally speaking, that is the biggest issue for all of us. It is that emotional response, particularly where we've got a good position. We've seen the market maybe fall or rise strongly. We've got some decent profit in our P&L, which we've already mentally banked anyway, because we always do. And you shouldn't have your P&L running live, because it's the worst thing you can do when you're trading. For other emotional reasons, for precisely that. And as the market then reverses, we start to panic and we close out emotionally, and invariably what happens is that trend comes to a weak close, reverses back into our original trend. And this is all to do with primary and secondary. In the primary trend, you will see a sustained trend. We then get the pause, we then get the reversal. What is happening in terms of the volume? Is it rising? Is it falling? Is it supporting that reversal? Because if you're seeing a reversal and you're seeing falling volume with it, then that is telling you loud and clear that that trend is not going to reverse. In other words, we are not seeing a primary to primary reversal. We are merely seeing a primary with a secondary reversal against it, and likely to see the reestablishment of the primary trend once more. And in a way, you can look at it like this little piece of price action here. We get a little reversal, maybe we start to panic, and then the trend, if we call this the primary trend is reestablished once again. So we get a little change in color here. Nothing too much to worry about, because the pressure associated with this move is very, very light. It's not like here, it's over here that we see these very small pressure bar, and therefore it gives us the comfort, the comfort blanket, if you like, that we can assume this really isn't going to go too far, and therefore, as we see, it reverts back into the brighter colors of bearish sentiment, and really nothing has changed. And we're still maintaining this side of the line, and we're still moving lower. And that's the issue, because you'll get out on these pullbacks. And let's face it, no trend ever goes straight down in a straight line or straight up. It never ever happens. You have to live through these pullbacks and pause points. Part and parcel. It's what trading and investing is all about. But you can see it here. We're building some nice pressure bars here. We're coming towards the end now. We've just gone through it actually at 1 minute past 9 here, UK time. So that's on Tesla with the VRSI indicator. Great little indicator. And as I say, it will be available on NinjaTrader next week. And it's based purely on looking at the relative volume. So it is a sister indicator. It is a supportive indicator to our VPA methodology. Very quickly move up to the VWAP. This is the other indicator that we've released recently. Again, it's on TradingView. This is Apple. And again, I've done a whole raft of videos on this, so I'm not going to explain it in great detail, but the VWAP is a key trading tool for intraday trading on stocks. It will work really well on other markets as well, but predominantly for stocks. What you will see a great deal, the VWAP itself is the central line, so it's the volume weighted average price. We then add these two outer envelopes, the upper envelope and the lower envelope, which are based on standard deviation. And what we're looking for is moves out to those extremes. We're looking for signals for reversals off those extremes. A lot of traders use the VWAP for crossing, which in my view is too simplistic. What you will see, you will see price action like this, where the price comes back to revisit. It revisits the VWAP. It sells off again. We get some buying coming in under here. We go down to our envelope. The price action then revisits again, back to the VWAP. Then we get the big sell-off, and on we go. Anomaly there, lots of volume coming in, so that doesn't look particularly strong. Indeed, it's not. Down we go again, and on we go. So it's very much reading the volume price analysis methodology, VPA 101, and all the VPA lessons that are associated with it, and then wrapping it around the VWAP indicator, which again has been designed to help you to stay in and also identify those opportunities when the price action is getting to extremes well outside the envelope associated with the VWAP itself. So that's on the VWAP. Let's just hop over onto TradingView. These are the indicators. I think they're up here. Here we go. The three new ones, the market strength indicator, the VRSI, the VWAP Pro, they're all up there. And the VWAP is 5 indicators in one. It's not just the VWAP. You've got the VWAP, you've got the MVWAP, which is the moving VWAP, which allows you to see the VWAP moving across sessions, because the VWAP itself will start recalculating from every new session. We then have the anchored VWAP, the AVWAP. You can move that around and put it precisely where you want on the chart. If you've got significant highs or significant lows, you can put it there and it will start its calculation from that point. We have the TWAP, which is the time-weighted average. And then finally, we have the intraday, which works on the much slower timeframes of daily, weekly, and monthly. So those are the 3 new indicators. They're all up there with all the others that I'm sure you already know anyway. We've got the cryptocurrency strength indicator and all the other indicators. They all come in that full package now. But what I really wanted to show you here very quickly, just before we wrap up, is, again, this is a chart. Some of you came along last year and the year before, you'll be very familiar with this FXCM account. We traded this up from, I think we started around about $800, and we got it up to about $3,500 over an 18-month period. And you might think, well, no, that's not very exciting. But when you consider that each pip on the micro lot, which is all I trade here, either 1 micro lot or maximum 2 micro lots, or I trade baskets of micro lots, which is what I was doing today. We had just over $9 in terms of micro lots. You think, well, yeah, okay, that's not very exciting. But when you think that a micro lot is 10 cents a pip, that's 90 pips. Now, if you factor that up into mini lots and factor it up into full lots, I'll leave you to do the maths, but that is a big number of pips. My purpose here is purely to show you that using very, very small trading accounts for FX, using very, very small lots, not going crazy, just trading what you see. This was intraday, was short on most of the, or some of the yen pairs, not all of them, Aussie yen, New Zealand yen, pound yen, and euro yen, I think, or CAD yen. Just trading in and out, trading off levels. And, you know, okay, we're not going to set the world on fire. We're not going to become multimillionaires with $9. But the point is, if you can do it with micro lots, then you can do it with mini lots. And if you can do it with mini lots, you can do it with full lots. And it's really then just a question of how much capital you can grab to fill your account to leverage up. It's as simple as that. And what I will do with this account is I will grow it again. We started around about $350, I think. So I've been doing this for about a couple of weeks now. So we're up to 372. It's not going to be spectacular bucks, but boy, oh boy, it's spectacular pips. And that's the message. What I wanted to show you here was, again, another chart which really highlights the potential for a tipping point. We're on the Aussie yen. I'm sure you're aware, risk currencies and all that. Again, it's at a very key level. We had this huge amount of volume coming in here where we saw the buying coming in. We've been riding that higher for 3 years or so. And now we're up at this level here. And it's all looking very, very toppy. You've got a lot of these candles here, big wicks to the upper body, really not going anywhere, driving in a lot of volume, and the market's not receptive. What you've also got here, which is worrying, you've got a big widespread up candle, but look at the volume under that. That's anomalous for sure. That has to be a trap move of some description. That's the big market operators just pushing this market up on really very, very lightweight volume. And in fact, that's replicated. If you look at it on the yen pairs, you can dig it out for yourselves. But if you look at, I think you'll see that on pound yen, New Zealand yen, it's very light volume that's appeared, but big widespread up candles. So again, it's a warning signal. We've got possibly a hanging man candle developing here. We're in sideways. We're starting to set up some levels here, which really replicate over here what happened here. So again, it's just another chart in a related market, which is all about where we are in the cycle, what is going to happen next, and it's putting all these pieces of the puzzle together. Anna talked about the bond markets. The bond markets are absolutely essential. If you are going to get involved in this market in any great way, you need to understand the bond market, because the bond market will drive everything at the moment, and it is an absolute key piece of the jigsaw. I can't stress it too strongly. So that's really where I wanted to finish, just to show you that one, and also touch on this little micro lot account down here. So I'll be running that regularly, and as I say, I don't go crazy with it. I don't have any particular rules, but generally speaking, I'll be trading baskets in here. I don't trade individual currencies on it. So it's very much basket. Might be a yen basket, might be a dollar basket, could be anything, could be a euro basket, could be a pound basket, could be anything. But typically 2, 3, maybe 4 micro lots max, because I don't want to bust the margin. And on you go. And we'll just see how many dollars we can build up and how long it takes. So very quickly, just to wrap up, this is where you'll find all the bits and pieces, all the indicators over at quantumtrading.com for all the 4 platforms there. As I say, those new indicators will be available on NinjaTrader 8. We're not putting them on 7 because 7 is a platform that is probably going to be wound down at some point and no longer supported. That's not to say it isn't at the moment, it is. But of course, at some point, I think everything will migrate to NinjaTrader 8 in the fullness of time. So they all should be available next week. As I say, they're up on TradingView right now, and they'll be in the full packages. But if you've invested in the full package in the past, it doesn't matter when, the last 10, 11, 12 years, then you will get those free of charge. Over on the Quantum Trading Education, this is where you will find the stock trading program alongside the Forex trading program. Both of them will be up here, complete new website with links to both. And finally, over on Anna's site, this is where you'll find all her analysis. which goes up there. You'll find all the social stuff we should do. It's all disappeared. I'll have to take a look at that. All the books are up there on Amazon, and all the various links to all the various pages as well. And of course, if you're not registered for the stock trading program, you can do so up here as well. So there we go. Thank you so much for coming along today. Hope you've enjoyed it. We will be back again next week, probably the same day, same time. So we will see you then. Enjoy the rest of the trading week and have a great weekend. So from both of us here, bye for now.